Welcome. Welcome, welcome. Godric here, your stock market mentor. Friday night, November 22nd, 2024. How are you guys doing? Probably you're up today. If you have stocks, probably you're up today. The Dow Jones 44,296 plus 426. Not an all-time high, but pretty close to an all-time high. We're in a bull market. Keep telling you guys. It's not always going to be this good. A real trader investor is going to be able to weather the good and the bad market, both, not just the good market. So some of you guys, let's be honest, are going to be gone the moment the market turns or the market kind of cools off, because you're not going to be seeing those gains. You're going to put yourself in other. You're going to put your money in other places. Is that you? Would that be you? The real traders, the real expert investors are going to make money regardless. Like what? Like Warren Buffett? Welcome, guys. Appreciate you. Friday night. I'll talk about some stock market stocks tonight. Got some stocks behind you. I have some stocks for you tonight to keep you out of trouble. 10 stocks I want to share with you that I think are pretty great. Most of them are about long-term share growth. In this case, long-term share growth on these stocks. There are some cover call plays on some of the stocks. There are some dividend plays. But tonight I want to talk about your IRA account. Your IRA account versus your personal stock market account. There's two philosophies, right? So the IRA, the theory with the IRA is that it's sacred money. It's money for your retirement. And it could be like your pension, your 401k, or just long-term savings that you have over your lifetime. So it's not for risky trading. It's not for, call options, So you're looking at long-term share growth stocks. And most of these 10 stocks I'm going to show you tonight are just that for long-term share growth. I noticed that in my IRA, sometimes my trading doesn't even outperform my IRA. Which is to say that sometimes my IRA account is just doing great and you don't have to do any trading. Just holding, and when you can, adding stocks. So make that distinction. Eventually, you're gonna have two accounts. One is your personal trading account or business account, which you can do active trading, cover calls, call options, naked puts, long, short, etc. And then you have an IRA account, which is sacred money that you're going to have long-term plays, very little trading, very, very low risk. You can do cover calls in your IRA. I'm not going to get mad at you, but sometimes you don't even have to do that. You can just hold these great stocks, and you'll have this great return on share growth. I still favor the income of covered calls and other trading, for example, but it doesn't mean it's better. It's just a different kind of strategy. When I'm coming up here Monday nights and other nights, Friday nights, I'm teaching you a lot about cover calls and how to retire in the stock market, because it gives you that income to pay your bills. Pay all your bills, you don't need to work other than stocks and investments. And then you can retire that way. Not having to work, later on in life when you're 50, 60, 70, 80, have your investments working for you. Do you have investments working for you right now? The stock market's the new frontier. If you look at the top 10, top 20 billionaires, all in stocks. So I think the stock market is a new frontier. People trust this avenue of investment where you're betting on these companies, these conglomerate corporate entities, which provide a product or service and throughout the world make profits. And you put your money with them and you get a return, whether it's a dividend or share growth, or whether you're doing a specific kind of trade, like we're talking about cover calls. Welcome, guys. Appreciate you. Medi, welcome. Tang, welcome. Robert, Green, Nelly, welcome. There's a few people in here, guys. Get my likes up. Oh, look at you guys already gave me 1,000 likes. Let's get to 2,000, can we? Can we press the envelope? 2,000 likes and give me 1,000 likes. Let's get to 2,000, can we? Can we press the envelope? 2,000 likes and give me 2 shares. Appreciate you. Get a few people in here. Send it to your friends. I'm going to take questions in a few minutes. I'll throw your questions down here. Where will Bitcoin be in 20 years? Thank you, Brockstar. It will be higher. Yeah. Matter of fact, it'll break 100,000 pretty soon. I'll bet my life it'll be higher. $2 million? Probably not. This is what happened in 20 years. There's going to be some new cryptos that are going to replace Bitcoin completely. So Bitcoin will be exchanged for a more effective, more efficient crypto. That's better. That's stronger. But that will happen for a while, and Bitcoin will be a lot higher than it is now when that happens. So that's what will probably happen. I think we're still going to be around, and I think that the markets will be even more prominent than they are now. These corporations, this idea about capitalism, I think, kind of fueling the world, and more. It's easier to work with them than to fight against them. If you look at this corporate structure, this capitalist structure, you have products and services that people like, and they sell them, and they make money around the world, and there's a lot of competition. And the winners are going to win and keep making money, keep making profits, and the investors are going to put money with them so they can get a return. And there's still going to be Starbucks, there's still going to be Netflix, Microsoft. You know, they may change companies, they may change company names, there may be exchanges for old companies replaced with the new. But I think there's going to be more of that. There's more of that happening, I think, in the next 20 years. So learn stocks now. So in 20 years, we'll have maybe a sizable account, make some money. What's your expectation for NVIDIA next few weeks? Next week, Medi. Let me pull up NVIDIA. That's one of the stocks I wanted to show you, NVIDIA. See if I can get it here for you. One reason why NVIDIA is good, it has a great 10-year chart. There's Palo Alto, there's a SPY, Microsoft. You guys want to take some pictures. I'm gonna go over these with you. Chipotle, Netflix. There's NVIDIA. Okay, if you look here, 10 years ago, NVIDIA was 52 cents. Not really, but including stock splits. It was never 52 cents, but with stock splits, I have to adjust the price down. So it's showing 52 cents. So basically, 52 cents went to $141 in 10 years. Now that's a success story. Let's look at the math on that. You guys have your calculators ready? This is what stocks can do for you, okay? 141.95 divided by 0.52. I already know it's 280. 272 times your money. That means $1,000 makes $272,000 just in the stock. Now, not that many people just held it that long. Some people are trading, adding shares, but you get the idea. You can't really lose money with that kind of investment. And then the theory is, in the next 10 years, it'll continue going up. It won't be as robust, but if it's doing everything great, which it is, mostly everything, it'll keep going up. If you look at the market cap, you can see down here, average volume 271 million, great volume. Can you see the market cap down there? It has a yield like 1 penny, which is interesting. I'll write down NVDA. I also have Tesla. These stocks will keep you out of trouble. I'm sharing with you. Tesla, 10 years ago was $16. Now it's $3.52. Let's do the math. 352.56 divided by 1630 equals 21 times. I'm going to have here NVIDIA. I'm writing it down for you guys. NVIDIA, write this down. NVDA. 272 times. Tesla. 21.6 times. How's that? Moving so you guys can see some of the stats in the bottom. Average volume 88 million. Nice volume. Market cap, it has a PE. These stocks all have PE, I'm showing you. Why is PE important? Because PE will show it's making profit. Some of these stocks you guys come across, it's no PE, it's no profit. They're losing money. But how much of your hard-earned money can you put in a stock that's losing money? You gotta think about that. Appreciate you guys. Thank you for the likes. Appreciate that. Continue with the shares, guys. Share with 2 of your friends. Could you see XERS? I'll pull it up in a little bit. XERS. Sounds really basic. I don't remember that stock. I would forecast closer to 300 in 5 years. 300 what? 300K for Bitcoin? NVIDIA took, what's up BlackRock? What's up player? NVIDIA took a 4% stake in AAPL. Do you think it's worth a couple of thousand as speculative bet? ALPD, I'll look at that one too. ALPD. Just because NVIDIA took a stake in it doesn't really mean a whole lot. It's just like news. But with that guy, look at the other stock and see what the criteria for the other stock is. I'd rather have a stock with a good criteria. Let's say a lot of the 12 check marks that I use, as opposed to just that just has a lot of good news about NVIDIA, gives them money, they get government contracts, they have this, they have that. Different like fundamental support, fundamental analysis. For me, the technicals make more sense. No crypto, just stocks. Crypto focus, yes. You know, I'm going to tell you something. A lot of people want crypto because Bitcoin's doing great right now because Trump mentioned Bitcoin. But Bitcoin's like hot for a couple weeks out of the year and then it's boring the rest of the year where it's going down. So I can't say about crypto except I think Bitcoin will be prominent this year. They're going to break 100,000 and go above that. But I don't compare it with stocks because the stocks are my bread and butter and I can teach how to do that. I don't do crypto myself, not too much. AFGY, I'll look that up in a little bit. AFGY. I'm wrapping back here. If I miss your question, just put it back again. 2 million. Rockstar, 2 million on what? On Bitcoin? Mod, MOD, Philly, MOD. That sounds familiar. Okay. Well, where will Bitcoin? Oh, I already got that one. Thanks for the questions, guys. Just put your questions in. If I miss them, just put them in again. All right, I think I went back far enough. Thanks for the likes, guys. Appreciate you. So I'm showing you a couple stocks that keep you out of trouble and that are good, like let's say for the next 10 years. And I have 10 stocks for you, and I want to compare them to the SPY, which is the top 500 companies, and also compare them to the QQQ, which is the top 100 NASDAQ stocks, which is mostly tech. All right. Tesla predictions this week. Tesla predictions. Well, Tesla will probably go higher with the market is creeping up. For Tesla, look at the 414 mark. If it can break 414, it'll be headed to 500. I think it can break 414. It probably won't be this week, but I think it'll edge higher and go towards 400s. Let's say by the Santa Claus rally, when that's over, let's say end of January, I would say Tesla would be breaking 414 probably by then. My guess. That's my prediction. You heard it here. Numbers look like they're headed for the right direction, made profit for the first time. That would be in Alpad MTB. I just throwing stocks out here. Cava, CV, that sounds familiar. CVCAVA. Okay, so we got NVIDIA 272 times your money. We got a Tesla 21 times your money in 10 years. Let's see what else we got here. Starbucks. Starbucks was 40 10 years ago, so not a huge gain. What's that? 2.5 times? 102.50 divided by 40. And also another value is that, do you have a company that's been trading for 10 years? Because you guys know stuff goes out of business. You guys know there's competition. 2.5 times, 2.56 times SBUX, 2.56. However, Starbucks has a nice dividend. Look at that dividend, 2.3% dividend. So not only are you getting the share growth of 2.5 times, but that's not counting the dividend, which is a little bit of icing on the cake. Why not? 100K brings you 2,300. Why not? I won't say no. No, you were speaking about NVIDIA at the time, 300K. Not sure I follow, but I think NVIDIA, let's say, okay, it's 140, right? So I can go to, let's say 200, 300, 400, and then I'll probably split again, 500. So maybe NVIDIA 500. You can keep its act together. What about 300K? I think it's a biotech stock. IONQ. Oh, dude, speaking my language now. IONQ. Quantum computers. Speaking of which, IONQ. Do you know that we did a trade today? See if I can find it for you. If you guys can make sense out of this, this is the covered call trade for IONQ. Quantum computers, share price 31.63. It was off a little bit today. However, the cover call is always great. And today we got, well, the bid was 296 and the ask was 305 for the 35 strike, and that was 1 month out. IONQ stock. So you buy the shares here at 31 market, $3,100 for 100 shares. You write the cover call for next month, December. In this case, it's 35. And that allows you to get some share growth of 4 points to 3.5 points of share growth. And you're getting for that $2.96 by 305, which is say $3. But what we did, we put a limit order, 320, which is above the bid and ask. We asked for more, and we got it. We got the trade. The stock spiked up like within the next hour, and it took the limit order. So we got 320. So let's do the math on that. 31.63 share price. Do the math. Guys, get your calculators out. Cover call return for 1 month. 320 divided by 31.63. 10% return. 10.1, but even better. 10% return a month, which is 100% return a year. If you guys can stay with these stocks, you can have a decent return. It's going to be a wild roller coaster ride that might chase some people out. So it'll separate the men from the boys. Because what? You may not get 100% return. The stock can get cut in half, for example, right? But then you only get 50% return. You know, the market only gives you a 10% return on average. And that's not every year. That's average of all the years. So you can have a loss in the S&P, in the Qs, in the Dow Jones, in the overall market. But if you're getting 10% per month, and if your stock even survives, you're going to have some kind of gain at the end of the year. I always say, do 10 cover calls a year. Write it down. The next stock I want to show you is Rocket Labs. Going up. RKLB. $22 today. $22.40 today. It was up a little bit, plus $1. Rocket Labs is great for a couple reasons, and only a couple reasons. Not a lot of reasons, because they have a good cover call. Sorry, I knocked out of the pictures. I was showing you Rocket Labs. If you look, let's look at the cover call of Rocket Labs, shall we? RKLB. Now, don't only do this stock. This is a high risk, similar to quantum computers. But when I go out 1 month, click options. If you guys don't have a stock market account, go Schwab. Go Charles Schwab. I like it. Use the Think or Swim platform. Or not. All right, December 20th, 27 days. It's still paying pretty decent. Buy the shares here. It'll cost you $2,300, $23.39. And you're going to write the cover call to say for the 25, I think. 25, yeah. 25. And that's paid $195 by 2. Okay. So let's just take the bid, $195. Easy peasy. Do the math. $195 premium for writing the cover call, which is $195 for your investment of $2,300, divided by $23.39 equals 8.33% return. 8.33% return. 83% in a year, maybe more. Not as good as IONQ, but pretty damn close. And what you'll see is, guys, these stocks will exchange premiums. Next month, we'll have 8% of IONQ and 10% of Rocket Labs. That's how it works. These other stocks I'm showing you, Tesla and NVDA, are more like 5% return on the cover call. 6% for Tesla. But what you're doing, you're exchanging premium for safety. Because where is Tesla really going to go? Where is NVIDIA really going to go? NVIDIA's the top game right now. These Rocket Lab stocks, IONQ stocks, they could go away. Honestly, we don't know if they're going to be here in 10 years. They may be replaced by something else. Okay, so those are two cover calls, which are high risk, high reward. Write those down. Rocket Labs and IONQ. Talked about Tesla. Talked about Starbucks. Talked about NVIDIA. Netflix, my favorite stock, hit 900. NFLX. I know you guys heard it, but I say it. I'd rather you have one share of Netflix than 900 shares of your dog shit penny stock that's going nowhere. Why? Because Netflix went from, is this right? 49. 10 years ago, 49.51. Let's do the math. 10 years ago, Netflix was 49.51. It wasn't really. It had a 7-for-1 stock split, for example. But they have to adjust the price down to reflect the stock split, so it's showing 49 price. 8.97, do the math with me. And 79 cents divided by 49.51 equals 18 full return on your Netflix. Now, I don't know about you, but you made 18 times your return in 10 years. That's 100% 18 times. Yeah. And these are great stocks for your IRA because they're probably going to keep going up. Netflix, as some of you guys know, replaced Disney as the #1 entertainment company. Yeah, look at the market cap, $383 billion. Is that what it says? It has volume. No yield, no dividend on Netflix. We don't need a yield. We don't want a dividend on Netflix. We want the share growth. Next one up, you guys take pictures. Chipotle, CMG. This one is growing. It's not as big as the other stocks as far as market cap. Let me pull up here. CMG. Like, you guys heard the news that it had rats, it made people sick. All this bad news will come out with McDonald's, with Chipotle. Any food company is going to have bad news. What? Buying opportunity. Isn't that weird? Dude, McDonald's made people sick. Buying opportunity. Goes back up. Get a dividend. Let's do the math. Chipotle was $13 10 years ago. 62.01 divided by 13.27. I'm gonna tell you guys, you don't know the value in having a stock that's been traded for 10 years. A lot of stocks are not even 10 years old. 4.67, almost 5 times your money. 4.67. Now, Chipotle was $3,000 a share recently. And they split 50 for 1. I mean, just write down 50 for 1 stock split. That's a rare bird. Write Chipotle down. So we got 1, 2, 3. I'm not counting Rocket Labs or IONQ because those aren't long term. Those are cover call trades. 3, 4, 5. We talked about 5 stocks. I want to show you the S&P 500 when it comes up. Domino's Pizza. This one just got added to Warren Buffett's portfolio. Domino's Pizza. $93 10 years ago. Let's do the math. 453. 35. These stocks will keep you out of trouble, guys. If you have no clue on what you're doing, take a look at these stocks. Divided by 93.85. 4.8 times, almost exactly what Chipotle did. Oh, look, they're both food companies. DPZ, 4.8 times return. Can't really lose money on that. The next 10 years, they're going to be higher. Probably. Apple. You guys know about Apple, don't you? As big and fat as Apple is, it had a 10, not a 10-fold, maybe it was an 8-fold return. Let's do the math. Take a picture, look at these stocks. 229.87 divided by 29.73. 7.7 times return, Apple. That definitely qualifies. As big and fat as Apple is, had a 7-8 times return. I remember when Bill Gates jumped in and saved Apple. He was going to make software for them. He made software for them when they were going out of business, and they survived. Kudos to Bill Gates back in the day. We just want to do these. Now here's the Qs. Now here's the top 100 NASDAQ stocks. Okay, look at this return. 106 at a 505. 106 10 years ago. So that is going to be a 4.76 return. So the QQQ, the top 100 NASDAQ stocks, is equal to Domino's Pizza, Chipotle, 4.76 return, almost 5 times. But nowhere near Netflix, 18 times. Nowhere near Tesla, 21 times. Nowhere near NVDA, 272 times. Nowhere, well, better than Starbucks. Starbucks, 2.56 times. I'm not mad at you, Starbucks. I know you're a dividend stock. All right, getting to the end. SPY. Here's the SPYs. Top 500 companies. The S&P 500. Here we go. 207 to 595. 595 divided by 207. This one has 2.87, not even 3 times. SPY, 2.87 times in 10 years. Not bad, but not as good as the QQQ. And why is that? Because the QQQ has a lot of text in the QQQ. S&P 500 has a lot of food companies, a lot of dividends. So that's why it's different kind of investment. I would say that the SPYs, even though the SPYs did 3 times and the QQQs did 5 times, more or less, the SPYs are going to be safe for investment because they're, there's more of a diversified portfolio. Food companies, dividends, Whereas the QQQs are strictly, mostly, a lot of higher volatile stocks, and they're going to get hit harder in a crash. That's just the way that works. Put a note for yourself. Palo Alto Networks. Here's another good one. Some of you guys don't know about Palo Alto. PANW. 10 years ago, it was $41. Let's do the math. 383. Write these stocks down. Keep out of trouble. Divided by $41 10 years ago. 9.35 times. 9.35. And just so you know, I've been in either in these stocks or watching these stocks more than 10 years. So the 10 years before this, it was the same thing. Though I think it's even more profound this decade than last decade. The market's just so much more robust. The rest of the world is looking to the U.S. for leadership. Palo Alto will continue to be good. Microsoft. Now, have you heard of the stock market? Has somebody heard of Microsoft? It's only the top best stock of all time. You heard that? Let's do the 10 years. 417 divided by, it was $47 10 years ago, $47.81. Oh look, 8.72 times. As fat and old, MSFT. It's not old really, but as big as Microsoft is, it still did 8.72 times return in the last 10 years. Do you see a trend? Like, do you see that chart? Can someone tell me how you lose money on that chart? Like, where do you lose money? Now, considering Microsoft is not really a covered call stock because it probably gives you only not even 2% a month. But it'd be more like a safe long-term, IRA stock for your IRA. Don't need to trade it. Just buy a few shares. And then last one, Amazon. Now this was between Amazon and Google, but I had to give Amazon the ticket because Amazon had a better return than Google. So Google got kicked out. Let's do the math. Amazon at 197.12. 10 years ago it was 1693. 11.6 times. Trying to keep you guys out of trouble. Buy some shares for your IRA. 11.64 times. We got Amazon, Microsoft, Palo Alto. We looked at the SPY and the QQQ, which also is a decent investment to buy a few shares, you buy a few call options. Then Apple, then Domino's Pizza, then Chipotle, then Netflix, Tesla, and NVDA, and that includes the 10. And then we looked at RKLB and IONQ for the 10% return cover calls, or close to it. Questions. All right, guys, I just threw a bunch of golden nuggets on you. Do your own research. Is $4,000 in savings a lot of money? Guy, help me with your name, bro. Mr. Guy. $4,000 in savings a lot of money. It is compared to the world market perspective. A lot of people are dirt broke. So $4,000 is like a small fortune. And what? $4,000. I'm not telling you to do this. If you want to get behind ION computers, IONQ, cost you $31 a share, $32 a share come Monday. You can get about $3 return per share or $300 per cover call per contract. So you get like 10% return a month. So yeah, so it's enough to do a cover call on IONQ. And with the extra $1,000, I would grab a few shares of what? Starbucks, Tesla, maybe some Microsoft, Palo Alto, Domino's Pizza. Take your pick. Stay out of trouble. Be safe. Thanks for the question. By the way, guys, if you guys gift, I'll take stars and cranes. I won't say no. If you want to follow me, do so. And if you're serious, give me a sub. You guys already know the subs. I take care of my subs first. Some of you guys have my cell number. You're texting me, blowing up my phone, showing you these trades, giving you stock market advice. I see Kenneth. Kenneth, you want to come up here? If you guys are subbing, you can request to come up. Take care of my subs. I might just subs only $5 a month, right? I might change that come next year in a couple months. I'm gonna take a survey on if I should raise my subscription to like $10, only because it'll separate the people that are serious from the people that aren't that serious. Yeah, tell me what you guys think. Like if you guys are subbing to me, you're talking to me, you know that just to have that advice, that advice in your corner is helpful to you, then you can do that, and I can advise or teach what I know. Appreciate you guys. Thanks for coming on tonight. Do you like McDonald's? Yes, I do like McDonald's. I didn't include it in the top 10 stocks. McDonald's is a dividend stock. Let me pull it up. MCD. $2.90 a share. It was at as much as $3.15 before the E. coli breakout, and it went down about $2.19. It just kind of slammed, just kind of like held steady like magic. Because what? Because it's a dividend stock, and dividend investors know that when the stock drops, what happens when the dividend stock drops? They buy. It's a buying opportunity. 2.45% dividend. What do they call comfort food? McDonald's will perform in a crash. You'll see. Mark my words. I can look at these other stocks you guys asked me. If you're still here, sorry I made you wait, but let me do that. MTB, is that right? MTB? MTB. So I'll look these stocks up. I'll answer more questions, then we're going to wrap up. Okay. M&T Bank. Corp. New York, $221 a share. $222 a share.
Updated. 111 and 41. Company profile.
Can you hear this?
Share profile. Short interest. Short company profile. Share profile. Short interest.
It's acting up. Okay, I'm gonna. You got me. I'm gonna read this for you. M&T Bank Corporation operates as a bank holding company for manufacturers of Traders Trust Company and Williamson Trust Company, a national association that engages in provisions and retail and commercial banking products and services in the United States. So basically, it's a bank. The company operates through three segments: commercial bank, retail bank, and institutional services, wealth management. See, if you don't know how to do your own stocks, you call a company like this, M&T Bank, then they'll invest the money for you. However, know that they're going to take their cut. Because why? Because they come in to work with a nice suit and tie, maybe a gold tie. Maybe they drive it in a Cadillac or maybe even a Bentley. Big ass sign on the wall. Whole floor of computers, traders. That costs money. That's not free. They take their cut. They're doing these trades, I'm telling you. They're getting a 200-fold return, an 18-fold return on Netflix, a 200-fold on NVDA, return on NVIDIA. They're getting 10% cover calls. And they're going to give you, like, what, maybe 10% a year, 20% a year? And they're taking the rest. That's what they're doing. I like the stock. Let me look at that. I have a 5-year here, my Schwab. It looks like it maintained in 5 years. It went up a little bit. It was 169 5 years ago. It has a dividend, 2.49 dividend. I like the dividend. I like the 5-year chart. Check. 5-year chart. Dividend. Check. The volume. Does it have volume? Yes. 951K. So, is that? Let me look down here. Might be more. Okay, yeah. Average volume is 1 million. Okay, but look, it's a $200 share price. So at a $100 share price, it's like having a $100 share price with 2 million volume. In which case, it qualifies for 2 million. So it has volume, has a 5-year chart. Has a dividend. I know it has PE. Market cap 37 billion. Not quite big enough, so I'm going to give it an extra market cap. Has a PE of 16. Really very fairly valued. 1, 2, 3, 4, 5. I don't think it has stock splits. Let's look at the stock splits. StockSplitHistory.com. Go to StockSplitHistory.com. Stocks have stock splits. That's great. It's a great indicator. MTB. One stock split. Okay, so it gets a check market. 10 for 1 in 2000. So it has stock splits. Let me see if it has a cover call. Probably not. Okay, I'm just going to guess it doesn't, because it looks like a boring bank. But boring bank could be safe and steady, right? Because what? Only a hot stock has a hot ass cover call, like IONQ computers. So next month it has 27 days. Buy the shares here at 222. Let's sell the 225. Can we do that? Oh no, you can't. You have to sell the 230. The 220 is $6. So you're going to lose 2 points of share growth. And really, you're getting $4, which is 2% return. So, and then the 230, it doesn't have enough strikes, but the 230 is paying 190 by 430, which is probably $3. Even at $3, it's 1.5%. At $4, it's 2%. It's 2%. Not really. We're looking for 3 to 5% solid on the cover call, so no cover call. So it has 2 X's on 1, 2, 3, 4, 5. So out of 1, 2, 3, 4, 5, 6, out of 7 criteria, it has 5 check marks. So I give it a pass. It's good. I have 4 more stocks to get to. You guys want to be patient. XCRS, ALPD, AFGY, and MOD. Let me just check your questions. I don't want to get too far behind. Appreciate you guys. Drop a question for me. I have about 4 more stocks to look up. And then we'll probably wrap up early tonight. I want you guys to enjoy your weekend. I'm not going to keep you here all night, but you guys are welcome to send me a message in my DMs. If you're subbing, I'll get to you first. Warlow. Warlow, is that a stock? Thank you guys for the likes. I appreciate you. Whoever's putting the likes up there, thank you. Appreciate you. Throw me a crane if you want, if you gift. Throw me a sub. It's only $5 a month. Do you teach? Barbie doll. Do you teach? Yes. You want to book Godric for a one-on-one session? I can do that. I like to mentor on the weekends because most of you guys, let's just be real, you're working 40 hours, 50 hours a week, some of you, working hard. So, wait till the weekend to mentor with Godric. I'll do like a 1-hour Zoom session, recorded, so you can wrap it back and keep it for your records. Charge $50 for that. DM me. Okay, questions. Tesla today. Aliha, Tesla today. I mean, Tesla today did fine. It was up, wasn't it? Tesla? Did I just show it? TSLA. I like Tesla because it's the #1 EV, the main game. Elon is the greatest, and it has profit. I mean, it has some good stuff. It has a great cover call. Look at it. Let me show you the cover call for Tesla. If you have 35 grand, now I want you guys to think about, to do a self-reflection. At your age, if you don't have 35 grand, sell all this shit in your garage. All right, let's do the Tesla cover call. Get 35 grand, buy 100 shares at the market. Go out 1 month. It was paying 6% last time I checked. 353 price. That's the after hours price, same difference. If you agree to sell it for 353, the way I find the sweet spot is I take the share price, 353, so 350, 355 actually, close enough. And then you look at the premium, they're paying $23, which is awesome at the money. And you go down until the premium matches the share growth from the strike, from the share price. So, for example, 353 share price for Tesla. And then if you look at the 360, it's paying $21. The 370 is paying $17. And it would be the 370. So the 370 cover call, which is you agree to sell the shares at 370, which is 17 points higher than what you bought it at, the 353, gives you what? $17.85, $17.85 per share, which is $1,785 per month for a 35K investment in Tesla. Yes, the stock will go all over the place, but you're going to get around $1,700, $1,800 a month. That will pay what? Your mortgage, your storage, your car note, your gas, your food. Some of you guys, it won't even pay for your tie. I'll just be right. I know some of you guys have a high expenditures per month. But that's what your investment will do. And let's do the math, shall we? 1785.85 divided by share price of 353 equals 5.05% return. 5.05% return with 17 points of share growth, which is awesome. It's tough to beat that with a big stock like Tesla. All right, guys. Buy oil and gas stocks, ASAP, sell tech. Rob Hess. What's up? What's up, Rob? Can we go back? Rob is saying to sell all the tech and to buy oil and gas. You can look at that. I won't argue with you. Can I do my cover? Can I get my 10% on my cover calls though? Because that pays my bills. I never liked gas stocks. I just thought there was a lot of competition. Like even a Chevron. I don't know what gas stocks are like. Hey, Rob, you want to throw in a couple stocks down there? I might read them. What gas stocks? What do you want? Chevron, 76, Unico. All right. Okay, so let me do these stocks you guys asked earlier. Without further ado, and then we're going to wrap up. ALPD. Let's look it up. ALPD. I'll probably just do 7 check marks today. There's more check marks, but did I write that right? ALPD. Did I write that right? Why is that not coming up? BlackRock, help me out here. ALPD, is that right? I'm not getting anything. Did I write it wrong? AFGY. Let's do AFGY. AFGY. AFC Energy. Oh, 12 cents. Ouch. Penny stock. I can't do it. Let's not go any further. We don't do penny stocks. Why? Because there's probably no PE. Market cap, 103 million. You're investing in a company that has a value of a house in Beverly Hills. No PE. Probably has no employees. Look, if you invest in Costco, 300,000 employees. If you invest in Starbucks, 380,000 employees. These are real companies. This AFGY, no, can't do it. No auction chain, can't do it. MOD. You guys asked me, MOD, let's bring it up. Median, MFG, NYSE. Okay, this one's $144 a share, MOD. Oh, you know what? On what stocks did I evaluate? MTB. I'm gonna give it 8. I'm gonna give it 6 check marks out of 8. I'm gonna increase the rating because why? Because it has a robust share price. So we can do 8 criteria tonight. Robust share price, cover call, stock split, fire chart, dividend, market cap, PE, and what was the last one? I'll remember. So MOD has robust share price, check, 144 a share. It has a volume. Oh no, it doesn't have the volume. Hang on. Does it have a volume problem? Ooh, 700K volume a day with 144 share price. I'm going to say volume no. X, not enough. Almost, but not quite. I mean, it has volume, but not a good volume, so I'm not going to give the check mark. Dividend. Let's look at the dividend. MOD. I don't see a dividend. Dividend. X. What is this stock? Let's read it. Shall we read it? Who asked for MOD? Business summary. Modine Manufacturing Company provides thermal management products and solutions in the United States, Italy, Hungary, China, United Kingdom, internationally. Obviously, it operates through climate solutions and performance technology segments. The company offers heat transfer coils, including heat recovery and round tube plate fin coils, gas-fired, hydraulic, electric, and oil-fried unit headers, roof-mounted. What is it for, though? For what, weapons? Gas coolers, transformer coolers, radiators, dryers, industrial heat exchangers. Well, the revenue is $2.4 billion, so it has revenue. Let's continue. No volume, no dividend, has a robust share price. Let's look at the 5-year chart, shall we? Chart not available. Is this a new stock? I'm gonna have to pass on this one. It doesn't. It's for some reason not giving me. Is my app freaking out? I'm not getting a 5-year chart. If I can't find a chart, I don't have the basics. I don't have the volume. Don't have a 5-year chart. I know it has a PE, doesn't it? PE of 46 has a PE. Chart X PE 1, 2, 3, 4, 5. Let me look at a cover call. Options. December 144 share price. The 145. Oh, it has a cover call. $7. The 150 is $5. I would sell the 150. I buy the shares here at 144. 14K investment. Sell the 150 next month for $520, which gives you share growth and premium. It says $520 by 8. So let's just do a $6 limit order. You can get $6 from there. Cover call. $6. Let's do the math, guys. 6 divided by 144 share price equals 4.16%. It has a cover call. 4.16%. I don't know too much about this stock, and so far I'm not getting a lot of check marks. But I got a robust share price. I got a PE, and I got a cover call. I had 3. 1, 2, 3, 4, 5, 6, 7. Let's look at the stock splits. Probably not. It doesn't have a 5-year chart. What is this? MOD. What are we on? MOD. Midline has no stock splits. X. If I have to give it a pass, I only have 1, 2, 3, 4, 5, 6, 7, 8. At 8, I only have 3 check marks. Let's work on that one. Keep your eyes on that one, but not yet. And then I just have one more stock, guys, extras, and we can close out tonight. I'll take a couple more questions, and then we'll wrap up. Questions. Thank you for coming, guys. Thank you for the likes. Appreciate you. As we close out, throw a couple shares. Give me 2 shares each, guys, to your friends. And I'll try to answer your questions, and then we'll wrap up. It's 140 now. Should I sell? Awful. It's 140 now. Should I sell? Well, let me look at the chart. This is MOD, right? MOD. 144. I don't have it. Let me see. Hang on a second. Where's the chart? Maybe my app is screwing it. I'm done with MOD. I got Verify at 69. It's 140 now. Should I sell? Verify. VERTIFY. What's the symbol on that? Verify. Verify. Stock symbol. If you put the stock symbol in there, I'll find it faster. Is it Verify Smart Corp? VSMR? Let me see. VSMR. Always go with stock symbols, guys. No, that's a penny stock. Listen, don't mess with penny stocks. I want to keep you guys out of trouble, man. Penny stocks, I get it. You buy something for 3 pennies. It goes to 6 pennies, you double your money. I get it. But there's no volume. I mean, there is volume. Sorry. There's no PE, no profits, no employees. What are you really invested in? It can easily go down to a penny, and then you lost most of your money. No cover call, no dividend. All right, let's do XERS. Someone asked about that. XERS. About to wrap up, guys. Give a short session tonight. Buy Pharma 310 penny stock. Not good. I'm not getting a 5-year chart. No robust share price. No volume. 700K volume. No. Hang on. Let me just double check. I don't want to tell you guys lies. Well, I do have a 1.5 million volume, but it's a $3 stock, so I can't do it. Stay away. Xeris Biopharma Holdings, a biopharmaceutical company, engages and develops in commercial therapies in Illinois. If it tells you the state it's in, it's not good. Gvoke, a ready-to-use liquid stable glucogen for treatment of severe hypoglycemia, pediatric and adult patients. Therapy for treatment of I can't even read this. It's like a medical biopharmaceutical. Market cap $461 million. It's the value of a house in Bel Air. Can't do it. Okay, guys, a few questions I want to wrap up today. Thank you so much for joining. Put those stocks in your list. Keep you out of trouble. Think about the difference between a long-term, low-risk IRA account and a shorter-term income personal stock market account. Different trade philosophies, different strategy, right? Makes sense. Earnings Monday, PM, your thoughts. Albert. PM earnings Monday. Albert. Well, PM is going to have good earnings. The whole world is smoking. Okay, I'm gonna apologize. My charts are not working tonight. I think it's the update at midnight. Sorry, but PM is one of my favorite all-time stocks. $130, and it has a dividend of 4%, 4.1%. Great dividend stock, long term. They're the world market for tobacco. Philip Morris International operates a tobacco company working to deliver a smoke-free future. So it's a tobacco company, getting the whole world hooked on tobacco, and then talking about smoke-free. Don't you love how they trick you? We're going smoke-free, guys. This is important, They sell patches, they sell nicotine patches, they sell vape, including ZYN brands, IQOS. Okay. So I can just say that they're going to make the earnings because they're smart, and it's going to go up a little bit. It's going to cool off. So if you're trading and you have a few bucks on the stock, you can sell and wait till it pulls back. If you're long-term investing and it does pull back, just buy some more shares. That's my advice on that. Thank you, guys. Who wants the last question? Throw it at me. Thank you guys for coming. Thank you, Kenneth. You guys are subbing. Appreciate you. It's only $5 a month. We might double that. We'll see. I'm gonna take a survey. I was in another live tonight with a dude who is doing stocks, and he's into writing weekly cover calls, and he's into stocks that are lower on the. They're testing me, guys. They're testing me. They want me to do a puzzle. He was doing stocks he hates NVDA because it's so overextended. He hates stocks like Netflix because he thinks they're overvalued. He's trying to buy value. Warren Buffett did do this strategy where he's buying value, like low PEs, I get the concept, but you're not going to get that monthly income that I like. 5%, the one we get in Tesla, 10% we get in RKLB, IONQ. So it's almost like he doesn't want to take a risk at all, That's why I think, he's older dude, I get it, he wants to be safe. So different strategies. I'm not saying I have the only strategy, but I don't think he teaches you how to pay all your bills. For all you guys, I'll teach you how to pay all your bills and retire in the stock market. That's what I do. You want booking for a session, send me a message. Thank you guys for your questions. BLBD is symbol of BLBD. If this is a stock, it's the last one, Albert. Appreciate you. BLBD. I will look at the comments. Bluebird Corporation. I'll look at the comments. The ones that I missed, I will try to send you a message if I can answer your question. I don't have my chart, but I have a $41 a share. Don't have the volume I need. Bluebird Corporation, together with its subsidiaries, designs, engineers, manufactures, and sells school buses in the United States. Oh my God, this is awesome, bro. School buses. There's my 12 criteria is the product relevant. I know school buses are important, but it's like anybody can make a school bus, so the product might not be relevant. But let's continue. Canada internationally company operates through two segments: bus and parts, and offers Type C, Type D, and specialty buses. And alternative power options. Like when it says specialty bus, it's like saying like it has a bus with more options. Compressed natural gas powered and electrical powered school buses. I like that they do gas and electrical. I like that. Because if they only did one, company also sells replacement bus parts. Okay. Let me just see if it'll show me a dividend. No dividend. Market cap $1 billion. Tiny. You're investing in a company the size of a tennis court in Beverly Hills. Let's pass on that. But you know what? Let me see if it has an option. Bluebird. I'm sure it has integrity. But if you look at, like, if you follow the company, you want to compare it to these blockbusters I'm showing you, you know, NVDA, Tesla, Netflix, Chipotle. These are the real stocks. I'm gonna check the cover call just for funs and giggles. Not enough options. $40. Well, it does have sort of a cover call. It pays $3.80 on the money on 40 for the 40, and it pays $170 for the 45. If you add those two together, let me see. If you average a 40 call and the 45 call for December, you're getting $280 plus $170. Let me add it together. 2.8 plus 1.7. 450 divided by 2. So if you did 200 shares of Bluebird and you got 225 average, because you're selling the 145 and 140, you got 225 income on a $41 stock. Let's do the math. 225 divided by 41, 24 cents. 5.45%. So it does have a cover call. So if you're in Bluebird, don't like the stock, it doesn't pass, but it does have a 5.45% return on the cover call, which will get you about 54% return on the year on the cover calls for 10 cover calls. And if you like the stock, stay with it. They make buses, cool. They're not going to have the requirements that I like, but that's what I would do if we want to stay with it. Market cap is too small. Does have a PE. It's not going to have stock splits or dividends. I get that. Thank you guys. Appreciate you. I'll be back on Monday night. Follow me. Doge, Marcus. I'll get back to you, Marcus. Thank you, sir. Godric out. Good night. For the subs, I'll DM you. Thank you, sir. Thank you for that.